I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show. It is July 27th, Wednesday.
It's Hump Day, and today's the interest rate update.
Remember, if you're new to the channel, be sure to subscribe, comment, and like. And remember, this is for informational purposes only. This is not financial advice.
Yes, we're smart folks, but we are not professional financial advisors.
Yes. Okay. Right off the bat, today is the big Fed day, the day that the Fed's going to be announcing. These interest rates. By the time you watch this show, the Fed will have announced what they will be.
Right.
What the Fed rate will be.
Right. So by the time you're watching this, there's actually going to be a change. And we debated, do we show this? Well, yes, because this is going to be the pre-change.
Yeah.
So this is what it is as of, 9 a.m. on Hump Day.
Yeah, July 27th.
July 27th. So here we go.
We see interest rates a little bit higher today than yesterday. 4.99 for the 30-year fix. The 15-year fix at 4.25.
The FHA and VA, same as yesterday. 30-year FHA, 4.5. The 30-year VA, 4.5.
And these interest rates come with no points. There's no extra fees, no discount fees to get those rates based off of these assumptions right here for these scenarios. In each of our borrowers has different scenarios, different criteria. This is for a primary residence for a credit score on conventional of 740. The loan amount's 400. Well, your credit score may be higher. It may be lower. You may be putting more money down. Mm-hmm. But these are where most of our borrowers really do fit into these parameters. The
point is these are real assumptions.
Mm-hmm.
These are not just fine print, pertain to nobody scenarios.
And we're just going to keep on saying that, if you're out there looking for a home purchase or refinance, especially on purchases, a lot of these lenders that you're going to be talking to get pre-qualified with, they're going to give you the same interest rate. They might be giving you 4.99, but there's a 90% chance, I would bet, that you're paying a point, which would probably be a $4,000 extra fee for that. Maybe $3,000, maybe $5,000. Anyway, be very careful. Be sure to.
Now, how do they know if they're being charged points?
There is a loan estimate that we're going to the loan estimate, and we'll go right into that here in a minute here. But today, 11 a.m. Arizona time, the interest rates. There's a 75% chance that the Fed will raise the rates 0.75%.
Yep.
Okay, so I know it's 75% and then 0.75%. There's a 75% chance the Fed's going to raise the rates. And where does that come from? It comes from all the traders, the option traders at the Chicago Mercantile Exchange. It's the futures and options traders.
And remember, when we talk about the Fed's moving the rate, they don't literally move the mortgage rate. They move the Fed's fund rate, which actually has implications which affect forward motion-wise the mortgage rates. Yes. The bonds adjust according to what the Feds kind of want them to do.
Mm-hmm. So right now, everyone's expecting the 75 basis points or 75.75% rise. So again, when they do that, it isn't like interest rates are going to rise, but like Tom said, that's already kind of baked into the cake. And let's go. Tomorrow is another big day. So today's a big day with the Fed release. Tomorrow is a big day with the GDP, because that will tell us whether or not we're in recession. And I heard someone talking about, we've been hearing for a couple, decades, that 2 quarters of negative GDP means that you're in a recession. Well, the White House and all these new economists are saying, well, technically, if we do this or we do that, and it's still negative, we won't be in recession. And someone was saying that's just moving the goalposts. That's changing kind of the rules on the field. And there's a lot of politics involved, but it's kind of an interesting time to be alive and watching the interest rates. So tomorrow is another big day for that GDP.
Yep.
We'll see if the official announcement is that we're in recession.
And I think just to go off what you just said with the whole moving of goalposts, however you want to phrase it, the big point is it's very complex out there. Just simply turning a word or moving a phrase or delaying when you do something will change and have economic implications, which is why we're not financial advisors. We don't know exactly what's going to happen, but we're simply reporting to you as we see the information come down.
Yeah. But you know what? Most financial advisors have no idea either.
They don't.
They just have a license.
Well, I'll
so
tell
they
you-
can say that they can give financial
And I
advice.
will tell you, I even think that the feds don't.
Yeah, feds have no idea.
Otherwise, we wouldn't be talking about this.
Yeah.
How about that?
Yeah.
We would have a super boring, flat, inflating economy at 2% for the next 100 years if everyone was perfect.
Right. Okay, so loan estimate. How do you know you're getting a good deal?
Right. Okay. So the other lender just quoted you 4.99, same as the Mortgage Brothers team. But is it costing me anything? Where do we look? Where do we go?
This is a 3-page document. The top of the first page, you're going to see your interest rate. You're going to see their loan term, 30 years. It's for a purchase. You're going to see that interest rate. You're going to like, oh yeah, I got a 4.99% rate. And then you go to the second page. What you're wanting to be looking for. This is an example of what a Mortgage Brothers LE would look like with this scenario. There would be 0 points for a buy down. And a lot of buyers out there, if you look at your second page of your loan estimate, you're going to see $4,000, $5,000. That's the buy down. That's that extra fee we're talking about.
Right. Now, there are costs, okay? So this is the closing cost details. There are costs, underwriting fees, also known as admin fees, appraisal fees, etc. What we're wanting you to focus in on is that points section. That points is like a extra special fee area. You shouldn't be paying that unless you wanted to have a lower interest rate compared to what the market is. And we're telling you the market should be 4.99, no points. You could call us and say, hey, I want a 4.5. We could work on that for you, but we'd have to charge points.
And we know that most of our competitors, I mean, like the vast majority, 80, 90% of them are going to be charging a lot of money for that 4.99. It's just the way they're priced right now. And we wanted to just point that out. Everyone, be careful. Be sure to send us your LE. Call us. We'll be happy to review it. And be sure to subscribe, comment, and like, because we're going to be back tomorrow with what the Fed actually did and what it did to the markets.
All right. Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com. And be sure to take a look at all of our other videos on our channel.